Hey all, welcome to ShareTreck, 27th of June 2022, and this is Raj here. The market looks pretty good in the morning. The pre-market numbers are looking great. Also, Europe has done pretty well. European markets are doing better. I don't know what's the cause for this optimism, but I'm absolutely sure that we are in a bear market rally, and the bear market rally can turn around anytime. So just be careful out there. With that said, let's get started with our daily update. Well, here is our first headline for the day. This comes from CNBC. It says U.S. Treasury yields start the week higher as traders assess rate hikes, recession risk. So when the yields go higher, that means the bond price are going down. And this would mean that money is coming out of the bond market. So it's a good sign for the stocks. I don't understand what is happening with the bonds. Bonds have been a weak point in my knowledge base. And I find it a very boring topic, and I honestly have not put much attention on understanding the bond market. But I think all these trends are going to be short-lived, because overall, if we look at the situation, things are rather bleak. None of the risk factors from the last so many months have gone away. And it also happens to be that Russia is being cornered by the rest of the world. That's going to yield some kind of a pushback. We have a lot of headlines about Russia and what's happening with, I'm not talking about the war part of it, but I'm talking about the sanction part of it. So with that, let's look at the Russian headlines that are dominating the news waves. The first one is Russia slides into historic debt default as payment period expires. This doesn't mean Russia doesn't have money. Russia has got plenty of money. It's not a problem. The problem is paying the interest in US dollars. So according to the rules of international bonds, if a bond is issued in euro, the interest has to be paid in euro, because the bond buyer doesn't want to go through the hassle and overheads of converting interest into their currency of choice. Likewise, if a bond was sold in US dollar denomination, then the interest has to be paid in US dollars. Russia offered to pay the interest in rubles, but the International Bond Fund heads, they said no, it's a breach of contract. So it's a technical default as far as my understanding concerns. It's a technical default from Russia. And why it is important is because when a country defaults on its bond payment, whether it is technical or otherwise, the result is that future borrowing becomes more expensive for them, because their rating as a bond issuer goes down. And that's the reason why Russia has been trying its level best not to default, but the West had left it no option but to default, because they can't pay in euros and they can't pay in dollars due to sanctions. Now, the other pressure campaign that is happening is that the G7 nations are going to announce an import ban on Russian gold. Russia mines gold and sells it. Now, that could be a source of income for Russia. They're going to shut that off. Already, European Union has announced the oil embargo to culminate in end of this year, and they are starting to source their oil and gas from elsewhere. So the idea is to choke out revenue for Russia so that it is not able to prosecute the war in Ukraine. And there is one more front in which the fight is going to proceed. The latest report is that G7 may impose price cap on Russian oil, but will it work? So what has been happening is, at this point of time, Russia has been selling oil in Asia at a discounted price, and still it doesn't matter much to Russia, because it's still getting more than it would have got in normal conditions, because at this point of time oil prices are elevated. So this is the kind of approach that is being proposed by G7 to bring Russia to heel, by putting a price cap on Russian oil, because other purchasers of Russian oil are not going to stop purchasing because it is cheap. And it's difficult to impose sanction on entire world. So if they put a cap on Russian oil price, it's going to put the rest of the world in favor of the G7, because if the rest of the world can buy Russian oil cheaper, then it's going to cause a competition between OPEC and Russia to keep market share, and therefore the oil prices will continue to go down, and it will meet the objective of the West. So that's the direction in which the G7 is going. And this could potentially be a factor that is causing optimism in the market, because as oil price goes down, the stagflation risk is not totally gone, but mostly gone, because we still have wheat prices to contend with. And if the same technique is applied on wheat prices, then we can definitively say that the stagflation risk is gone. So it seems that the world might have come up with an instrument to blunt the stagflation risk. That's another positive, which is why the markets could be positive today, in my opinion. And with that said, I would like to bring you another bit of good news. European markets climbed to positive as global momentum continues to pick up, and I guess these are the reasons why it is picking up. Oil prices going down further is helping tame down the inflation. So the anticipation is that inflation rates in the next reading might show a bit of a let up, and that would be a positive sign. In anticipation of that, there is this positive global momentum. But given that we are in a bear market, we should be very careful that this could change on a dime. I would also like to put a short clip out here which talks about some experts saying that the bottom is not yet in, and they have their own reasons why.
Yeah, look, I think at this point, odds on recession are coming in around 50-50 if you look at, an aggregate of the pundits out there. And so, look, it's very common to have these bounces during a secular downtrend. Could we be at bottom? It would mean that inflation is peaking. Do I think that necessarily that's the case? It would be nice. I think it's going to take more than what we've done so far to really tame inflation. So my instinct is that no, we're not at bottom, and we may go up a little bit more this week, but the long downtrend is still probably going to come to bear. But that doesn't mean that investors shouldn't be taking an opportunity to buy. If you're a long-term investor, don't try to time the exact bottom.
Kevin, it seems like everybody we speak with says the same thing, or a version of it, which is that stocks can't stop going down until interest rates stop going up. We had a huge move at the beginning of the year. The dirty little secret about the 10-year is that 10-year bond yields are kind of the same place they were about 2 months ago. They've bounced around a bit, but we're kind of at the level we were 60 days ago. Do you think the 10-year has stopped making these aggressive moves?
Brian, I think that it has stopped making aggressive moves, but I don't think that we've seen the peak in yields this year. The Fed has said that they're going to fight inflation at all costs, and that means that they're going to continue to raise rates. And so that's why we think that, yields are going to go higher for the 10-year. And we also think that, from the standpoint of equity markets, I agree with Dana here. We have not seen the bottom. I think that we're going to be range bound at best from 3,500 to 4,000. And, consumer net worth has gone down, and that is typically is going to help with the equilibrium of, supply and demand. But the problem is that this is a reoccurring loop that we have here. As we've gotten this optimism in the market, but all of a sudden that is also going to drive prices back up. So at this point, I think that we're going to see the 10-year go back up and touch those old highs around 3.5.
Let's start off with the futures. The futures are looking green, 0.48%, nothing great to write home about. But the significant factor I see here is that we are above this red line of resistance. So I'm going to mark this as green and as a support. So we are likely to consolidate, in my opinion, somewhere in a higher range. Though we are still in a bear market, I don't see that gains are going to be permanent. You also saw the clips that I played to you before from some experts who are showing the reasons why. I stick with that, but for today, the futures are showing positive, opening in the green. Let's go and look at the indicators. So first, I'm going to look at U.S. oil. U.S. oil prices are kind of facing a resistance around 107.52. They're right now at 107.76. Overall, the global trend for oil prices should be downwards, and we also have our diagonal line of resistance out here. Let me just expand this chart so that you can see each of those candles clearly. These are all one-day candles, and this is where we had the line of resistance, and as you can see, we hit the resistance and we came back. We crossed this resistance though, that is 107.52. So there are two resistances out here, and that's the immediate resistance from the 9-day exponential moving average, 50-day exponential moving average, and the 20-day exponential moving average. So there's a lot of strong headwinds for oil. And also you heard in the news earlier, the G7 is talking about putting a cap on Russian oil prices. And if they put the cap at a lower level in order to hurt Russia, that's in turn going to make all the other countries buy cheap Russian oil, which will put pressure on OPEC to reduce oil prices in order to compete and retain market share. So we'll see a downward push in oil prices. I doubt if they would use the same technique on wheat, but if they do, then we would have a potential problem for our market downslide, and there could be a reversal in the works. That's probably what is causing the optimism in the market today. We are so far looking green. And also the gain out here is very slim. It is still within yesterday's range. So the chances of it coming down is much higher than going up, because MACD is also bearish. Momentum is also flat and below average. So US oil will go down. And then I'm looking at the next one, which is the US dollar index. US dollar index is absolutely range bound, so it's not showing much of a movement, and I would consider this to be a wash at this point of time. And also you can see that the MACD is moving towards the signal line in a bearish manner and aiming to cross over to the bearish side, and momentum is also flat. So US dollar is also slightly in favor of the bullish side of the case. And with that said, I would like to go and have a look at our QQQ. And when I look at QQQ, we can see that we are forming some kind of a range here. I would just hazard a guess that it's a range that is being formed. I would put the range somewhere out here, which will be the top, and this green line would be the bottom for the range. So we are somewhere in between these two ranges. I'd like to quantify that as 315 on the top and 273.52 on the bottom. We have all kinds of resistance in between, but I think we are going to mostly hover around those areas. It will be a few days of going up and then a few days of coming down. We still have got to fill up this gap out here. So today may as well be an opportunity for us to fill up that gap. I'm going to mark some areas as support as we have crossed them. So these are also becoming supports, and we also have the 9-day and the 20-day exponential moving average becoming support. MACD has gone bullish and moving away from the signal line. Momentum has just crossed above average. So everything is looking good for a very green day today. So QQQ is showing a gain of 0.25% pre-market, which is not much to talk about. But I think the talk of putting a cap on Russian oil prices is probably going to help the market. And also you will read news elsewhere that Russia has made more inroads into Ukraine. So we may potentially be coming to the close of the Russia-Ukraine conflict with all the sanctions and other pressures being ratcheted up. And I think that adds to the positivity in the market. S&P 500 again has gained 0.04%, which is not anything major to write home about. So it's evenly poised between bullish and bearish case scenarios, but it's also indicating a positive open. It's around 8:33 a.m. in the morning, fairly early in the morning. But if we see any move upwards, I think it's going to be a temporary phenomenon. It's likely to be given up in the short run, but we have lots of gaps to fill up because Nasdaq as well as S&P descended very, very hastily, and they have left huge gaps in between. We have filled the first gap so far, and we need to fill the second gap, and that could also be another factor that will drive the prices upward. We still have the 50-day exponential moving average as a key resistance, and today we are battling a resistance at 389.67 at market open. Right now we are at 390.24. So I would mark that as a green support after the market opens, and we are conclusively above that level. So with that said, I would like to go and look at crypto and gold and see what's happening out there. Bitcoin is still hovering around the support of 20,233. It's being constrained by the 9-day, 20-day and the 50-day exponential moving average. In fact, all the exponential moving average is constraining it, and our MACD is slowly moving towards the signal line. with the aim of crossing over, but the momentum is rather weak. So Bitcoin is looking weak on the charts. And if you were to look at gold, gold has gained 0.17% as of today, and it's still got a resistance at 1,841.26. Gold is also looking a bit weak. The MACD is slightly bullish, but the momentum is below average and flat. That's why I say it is a bit weak. With that, I think we should go and have a look at our genomic stocks. All the genomic stocks ended green yesterday, and the ones which are green from yesterday, on Friday, are going to be the weaker of the lot, and the ones which were red on Friday are going to be the stronger of the lot when it comes to capturing the bullish action today. So in my opinion, DNA, Caribou and Editas are likely to gain slightly more strength than the others. The gainers on Friday were Invitae at 9.25% up, and Intelia at 5.22%, IMTX at 5.15%, Verve at 4.45%, and NVS Novartis at 3.67%. So the first four are all above 4%, so they are the major gainers. The others have been in the single digits, with Regeneron, Allogene, SQZ, Illumina bringing up the rear end with gains of less than 1%. With that said, I think genomic stocks are also growth stocks and high-risk stocks. The market seems to be a bit risk-on pre-market around 8:36 a.m. If this trend persists, we are going to have a green open in the market, and the shares will gain further. The ones which lost the most on Friday are likely to gain better than the ones which were already green on Friday. But overall, it's a positive open that is indicated, and all the geopolitical news and everything also indicates a bit of optimism that finally there may be a tool to bring Russia to end the war in Ukraine. The bond default is also another factor that's going to put a lot of pressure on Russia. So hopefully we come to an end of the Russia-Ukraine conflict, and also reduction of stagflation threat is another positive for the market. So everything is looking positive today, even though it's in a negative backdrop. So let us enjoy the temporary respite we have been given and enjoy the green in the market. I'm going to scout around along the market to see if I have got any shares that I could buy and sell within the day and make a little bit of money. I haven't made any money in a long time. I haven't done any trades in a long time. I have cash sitting out there. So I'm seeing whether I could deploy it for a day trade opportunity today. But I'm a bit afraid about that because VIX is much higher. We didn't look at VIX when we did the indicators. Let us go and have a quick check at the VIX and see where VIX is at. VIX has come down to 28.33. For doing any swing trading and day trading, we need VIX below 20, and that has not happened yet. And we have the support of the 50-day exponential moving average for the VIX. And our MACD is bearish and moving away from the signal line, but momentum is picking up. Therefore, the VIX might go up a little bit maybe tomorrow. But for today, it seems that the VIX is likely to come down. With that said, I think I would like to end the video here. I hope you liked this video. Be careful in your trades out there. If you like the video, please put a like out there so that YouTube can promote our channel to other viewers and help us grow this channel. And if you're not yet a subscriber, why not? Please subscribe. It's absolutely free. Help us grow this channel. Bye and have a great day. I'll see you again later on.